Today I'm discussing what real private banking is and why wealth management forms part of the private banking offering. In part 1, I talked about how people make money, and in part 2, I explained how your spending decisions shape your life. And then you get into the wealth management space, right? This is now where private banking clients are. These are the people who are looking at the long term, they're going to leave a legacy, and they are the part in the Gini coefficient who are the rich getting richer. The clients who operate in this space are the reason why private banks exist. They have created banks for themselves, and they are using commercial banks and other financial institutions to access products that have enabled the exponential growth of their assets. This is the core of private banking. This is what it means when private banks say they create, maintain, and preserve wealth. So how do these individuals create their own banks? Let me start with how commercial banks make money. You place your money in a savings account at the bank. The bank lends that money to businesses and other people. The businesses and people pay the bank interest for borrowing the money. You then earn interest from the bank for letting them lend your money. The bank keeps the remainder, and that's how they make their profit. The bank's assets are the loans they lend to businesses and people. A bank's liabilities are the savings that we place in the bank. You would have noticed that the interest rate on a savings account is always lower than that of our loans, because somewhere in the difference between our savings and loans, the bank makes a profit. The same applies to individuals in the wealth space. They make money from the income streams I discussed in part 1 of this series. Then they invest in assets and or borrow money from the bank to buy more assets. And somewhere in between the profit they make from their investments and what they have borrowed from the banks or financial institutions, they make a profit. At some point, when they have enough assets, they stop borrowing from the bank, but instead they borrow money from themselves and they pay themselves back. Their assets are managed like a commercial bank, but it's for themselves, and that's why it's called private banking. In private banks around the world, what we call a wealth manager is actually what they call a private banker. So in this space, what happens? So these clients have assets galore. So I want to start with us, who are like, with myself included, the hamsters, right? The minute we start breaking out of that making ends meet, for example, you start with one asset, and then from that asset you acquire more assets, and then these assets generate money and they allow you to pay. So let me make an example. I think that would be best for me to do. So imagine you're straight out of varsity and you get your first job, and then now you need a car. So instead of buying a luxury vehicle, you decide to buy yourself a bakkie, like a van. And then you start opening a business and use this van for deliveries. You hire somebody to do deliveries for you while you're at work. Then suddenly this car pays for itself, right? And it leaves you at a point where you don't feel like you're paying for a vehicle that's just parked in the parking lot the whole time when you're at work, right? Then suddenly, because this car is paying for itself, you are able to buy yourself property. So now you've got a home and you've got a vehicle. So some people will pay rent and then buy a vehicle that's just sitting there, and then you find yourself, then you just have the one asset. You've got the car, but you're paying so much towards this car and it's depreciating in value. Another example I'll make is like, I mean, for people who live in areas where there's Uber, I mean, imagine buying that Corolla or whatever car they need for Uber, and instead of buying a luxury vehicle that's going to sit in the parking lot, you use that car for Uber, and then it starts paying itself, and then you start buying more assets. So what I'm trying to demonstrate here is that private wealth clients started with an asset, and then they bought another asset, and as they continue to pay for these assets, then they're able to unlock or use the equity within those assets to buy more assets. So you literally just buy a property, for example, for 2 million rand. When it gets to when your debt is about 1 million rand, then you are able to access the other 1 million rand to buy another asset. And once that asset generates money, then you pay back your bond. And really, that's what happens. So even in private banking, you find, well, in the space that I was in, you found that even though we would grant loans for a 20-year period, generally people paid off their bonds within a 7-year period because they're buying assets and they're paying back, buying assets, paying back. So that is what private banking clients are doing in the wealth space, right? They have either invested in property, cash, equities, commodities, I mean the 4 or 5 asset classes. But the beauty about them is that they are the guys who employ most of us. So they'll invest money in a business. I mean, the business is an asset, it generates income, but then they employ people. But then it's the employed people, us, then who become hamsters. Not all of us. I'm just trying to paint a scenario that it's either you're going to be stuck in the second quadrant where you are just making ends meet, or you also want to break out to be that person who owns the assets. So banks generally accept private banking clients based on their income, but income just shows that you've got the potential to be in that wealth space, right? Other banks accept clients based on their net asset value. And where I worked, the minimum net asset value that you had to have was 15 million rand. So your assets minus your liabilities must be equal to 15 million rand. Then they know that they can work with you, right? Some banks don't even accept clients based on income because of their profession. I don't want to mention those professions, but it is in those professions you find that the clients earn a whole lot of money, but their spending patterns are not that great, you know. So what the banks have done is that they've studied these clients' spending patterns, and these clients add no value to the bank because they are not buying assets. They're really just spending their money on lifestyle. And when a client does that only on lifestyle, then it makes no financial sense to the bank. So they're basically just a liability to them. So even if you earn 2 million rand and you are just living this lavish, fancy lifestyle, and you are not, you know, you don't have a long-term view of building wealth, then they don't want you, you know. So you must always remember that banks are there to maximize profits, and the private banking models requires sustainable clients who've got that long-term view of building wealth. So I want to give you like examples, like of things that I used to deal with like on a daily basis. But this client owned a franchise, right? He had this product, right? And this product was within the private banking space, and this product was literally developed for clients, for private banking clients who just want to make more and more money. And this client used it perfectly. So he owned a franchise, and then he had paid about half towards, like, half his debt towards this facility. And then there was an opportunity for him to open another franchise. And when he needed the money, the franchise fee, he just dipped in to this facility. It was simple, and the beauty about it is that the facility was the cheapest way in which you can get money, because it was against his property. Usually home loans are the least expensive products. So he just got money, he just transferred money out of that account, gave it to the franchisor, and now he's acquired another asset, which is another franchise, which now generates income. And within 6 months, he paid it all back. So in the beginning, it might take longer because you just have the one asset, but the more assets you buy, the more it's going to be so much quicker for you to pay off debt, until you get to a point where you won't even need the bank anymore in terms of home loans. Now, where you are the one depositing, where the bank needs you to deposit money and to invest money, right? I mean, I had a client who once told me that he doesn't know whether he'll be profitable for my portfolio, because he's never ever going to, for the rest of his life, going to borrow any money from anyone, right? From any institution. And he had a trust that had so much money that his child would also never, his child, I think, was about 4 or 6 years old. His child will never ever have to borrow money in their in his life. So those are the kind of legacies that these clients are building, you know. I had a client once who called me one week, and he said, "Hi, Makaje, next week I'll have 8 million rand in my account. I don't know what to do with it. Tell me what to do with it." You know, I wish I had those problems. So this client was based in Cape Town, and every time I tried to move him to a banker in Cape Town, he refused. He wanted to stay with me. So what I told him was to obviously park it into like a money market account until him and I have a conversation. And I think it was at that time then when he now agreed that I should move his portfolio to Cape Town, because I wanted the bankers and the specialists and everybody in Cape Town to be able to have this conversation with him. Well, to ask him about his goals, see his income. He must tell us where he's going. And you cannot give anybody advice about investments if you don't know where they're going or where they want to go. So also, like, I mean, I had clients who would buy like a 7 million rand house, and then a few months later they get a 2 million rand bonus, and then that money just pays off, you know. So it's really, like, I cannot stress this enough, that it's not about how much you earn, it's how disciplined you are in order for you to go to build wealth, to buy assets. Like, I know I keep saying this because it's so important. That's how people get rich. So if you want to get rich, just listen to that, that alone. I hope I've inspired someone today. Please subscribe to the channel and share this with your family and friends. And always remember, the power's in your pocket.